This conference will now be recorded.
Good afternoon. Welcome. Welcome to a special Clear Lines training session. I am your host, Kipp Cohen. For those of you that are here for the first time, I typically do a twice weekly training session every Tuesday and Thursday. It is an open session for individuals that are subscribers of Clear Lines, or for those that have interest in learning more about the Clear Lines indicator running on the MedVed platform. Every Tuesday, Thursday, 3 o'clock Eastern. You can use this same link that you see on your screen for logging into that on Tuesdays and Thursdays. On a side note, next week, I will not be doing any sessions as I am taking a week off. So I will not be here. But for those of you that are subscribers and need some level of support, just text or email me and I will get back to you. You can email me at kip@equity-alerts.com, or you can call me on my cell phone or text me at 972-841-8886. I will be around, and I do have capabilities if I'm not home to access TeamViewer remotely from my iPad or my iPhone if you get in a bit of a bind. So today I wanted to do a special session. Hey Paul, last week I did a training class for a group of individuals, a fraternal organization, and I picked the subject on shorting stocks, and actually took one of my old presentations that I had done for WiseFest many years ago and updated it, obviously, to reflect what we're doing now, some of the same information. But I'm going to be going through that presentation. If you have specific questions for me, don't hesitate to ask. You can submit those questions through the GoToMeeting player. There's a chat box. Also, at the end of the session, I will do Q&A then. And if time permits, we will look for a trade or two. So also, I am recording this session and it will be made available on our YouTube page. So I'm going to actually shift my screen. Give me 1 second. I'm going to, hold on, see if I can figure out how to shift the screen. If not, we'll just have to go off of this preview. Oh, hold on, there we go, stop screen. There we go. Share. There. Now you can see the presentation. Okay. So again, I am Kipp Cohen. Some of y'all, I'm sure, remember me from those that are new to this session. Remember me from the old WiseTrade days, and so WiseTrade closed down almost 2 years ago, and I have partnered with Jim Chanel and Lindsay Perry. We have equity-alerts.com and also have a company called Clear Trading Systems, where I market the Clear Lines indicator on the MedVed platform, and you will see that as we go through the presentation. So equity-alerts.com, again, that's the company. We provide market commentary from market open to market close, providing trade alerts. My partners and I, we all trade live, and also we post to our website every day our trade results. So you can actually go to equity-alerts.com, click where it says results, and usually they get posted by the next day, the next morning. There's a bio on me, though, on the website. You're welcome to read that. I'm not going to read it to you, but I've been doing this for over 20 years now, helping traders. I've taught over the years thousands of traders through my days at Wise Trade, and I have developed some very specific strategies that we trade pretty much every day. Basically, overbought, oversold. And so one of the things that we do, or that my partners and I, especially Lindsay and I, Jimmy is a little more on the long side, but we love to short. And I've just, ever since I got into trading, and, you know, when I first started this, I really didn't even understand the whole concept of shorting it. It was confusing and it kind of went over my head. And so I was wanted to learn it, and I learned it, and I love it. So what is actually shorting? What does that mean? Shorting a stock means that you sell a stock that you don't actually own so that you may profit from its potential decline in price, right? So traditionally, the old most people, most investors and traders, typically they like to go long, right? They buy low, sell high. That's what we were all taught. Buy low, sell high. Um, 1 second. So shorting is basically the same thing, but it's just done in reverse. You're selling high initially and then buying back low or at a lower price later. So obviously we look for uptrends or stocks moving up when we're going long. We look for stocks rolling over or downtrending when we're going short. So why would you want to short? What are the benefits of doing it? Well, big benefit, one of my favorite benefits is that stocks tend to drop or fall about twice as fast as they go up. If you attended one of my classes in the past, or you heard me talking, I've said this before. Stocks tend to take the escalator up, but they will frequently take the elevator down or the elevator shaft if it's really bad. And typically, negative news will bring a stock down quicker. Bad earnings or sometimes good earnings. If it's a drug company, they have failed one of their tests. So there's a lot of factors, but when that selling begins, people typically start to panic, and it begins a very rapid drop in price. And then you throw on top of that, if there begins panic selling and then you start getting shorts, sellers stacking on top of that, it creates a double momentum, driving it down even quicker. The other biggest benefit that I'll say is that shorting a stock allows you to play both sides of the market. We know the markets don't go straight up. You know, they go up, they come down. I mean, they do go a little sideways at times, but typically markets go, you know, they don't go straight up, they don't go straight down, they oscillate. If you're just trading one side of the market, you're missing a lot of the moves. So it gives you that opportunity to play both sides. So we're going to play a little game. We're going to play Where Are They Today, just to give you an idea of what has happened to a few stocks over the past 10 years and how negative news, things can change. So you probably all heard of these companies: Frontier Communications, Pier 1, J.C. Penney, Whiting Petroleum. We watch Whiting quite frequently. So 10 years ago, Frontier was about $107 10 years ago. That's probably split adjusted too. They probably reverse split it. Just recently, beginning of this month, about 9 cents, 9 cents. And actually the symbol is, they're in bankruptcy. So it's like FTR something Q now. Okay. Actually own some shares. I bought in the right around the 9 cent range just for see what happens. Pier 1, I'm sorry, JC Penney. We all know JCPenney. 10 years ago was a $21 stock. Today, about 34 cents. I believe they're also under bankruptcy. Pier 1, split adjusted 10 years ago was $128. This was a stock, if you remember back in 2008, this was one I actually bought for 15 cents when the market had bottomed out. I sold it, that was on a Friday. I sold it on a Monday for 45 cents, thinking I was a hero because I tripled my money. Of course, it continued to run to about $26. And it's had a reverse split since then. So it's last week was 13 cents. They are going out of business. They're shutting their stores down. And then Whiting Petroleum, 10 years ago was $154 stock, and recently about $1.18. You probably remember these companies in the past, Enron and WorldCom. What happened to them? They went bankrupt. So the reason I share this with you is that stocks do not go straight up. They also go down. You can definitely benefit from that sell-off or multi-year sell-off if you're a long-term shorter. So what are the risks of shorting? Okay, because there is risk, right? Technically speaking, you have unlimited risk potential without a stop loss, right? So theoretically, if you bought a $100 stock, you bought a stock for $100 and it went to zero, the most you could lose is $100. But if you short 100 stock and you don't use a stop loss, you could lose hundreds or thousands of dollars. I mean, think about if somebody shorted Amazon at 100 and it's, 3,000 now, would have lost a lot of money. I mean, they would have been taken out, obviously, but there is unlimited risk. So one thing that's very important, we don't trade short without a stop loss. And you don't want to over leverage yourself if you're going to hold shorts overnight. Never over leverage. The other risk is you could be forced out of the position by your broker. You're borrowing shares, and so if they need those shares back, they could force you to cover that position, whether you're in a profit or loss. There's also something called a short squeeze. Like, squeeze me. And that's basically where the price is driven up artificially or intentionally to drive out the shorts, because as the price rises dramatically, they're going to start covering, and then as shorts covering, they're buying, so they create false buying, and then it causes even a faster rise in price. So that is a risk. So how do you short stocks? Well, you're going to borrow shares from your broker and then sell them in the open market. That's in very simple terms. That the way that takes place is you're going to place the order to sell short with your broker. Your broker is going to look to see if they have those shares available in inventory or through their clearing firm, which they might not. I tried to short one this morning, NEO, and with TD Ameritrade, there were no shares available, so I was not able to get in. If they find the shares, then those shares are sold in the open market. Money comes into your account, theoretically, basically. And the broker technically holds those funds as collateral against the borrowed shares. If you're trading in and out the same day, you're not going to deal with any potential margin issues. But you may have margin related fees if you hold overnight. The buy to cover, you're basically place your order to buy or buy to cover, depending on your broker. You will use those funds. The broker frees basically up those funds for you to buy those shares back in the open market. And then those shares get returned to the broker's inventory. Now it's all pretty instantaneous. It sounds like a long process, but you're talking milliseconds typically, unless it's hard to borrow. And then in that case, you might have to wait or request for shares when shorting. But the actual process typically happens very quickly. So how do you profit from shorting? Let's say you take XYZ stock and short 1,000 shares at $30, and then it drops to 20, and you're like, "Ooh, time to get out." You place a buy to cover at 20, so $30,000 comes in on the sale. 30,000, 20,000 goes out to buy back the stocks, and you are left with a net profit of $10,000. Well, that's all fine and dandy. How do you lose? Because there's a flip side, right? There's always the risk. You could lose. Same trade, you short 1,000 shares of XYZ stock, but all of a sudden some big piece of news comes out and the stock runs up 10 bucks and you have to bail out. So you brought in 30,000 when you shorted it. Now you need 40 to get out and you'll lose 10,000. So it is important to know there is definite risk when it comes to shorting. The key is always have a stop loss. There are also special rules related to shorting. First of all, shares may not even be available to short. I haven't been able to get Tesla for a while, right? Also, it depends on the broker. Interactive brokers typically almost always has shares of everything to short. TD Ameritrade usually has most stocks, but a lot of the biotechs and even Tesla right now have not had available. This is an interesting one. If you hold a short through an ex-dividend date, you are liable to pay that dividend. Because remember, they typically adjust down the price of the stock when they pay that ex-dividend. So that would come out of your account to cover that dividend. All right. You can also only short stocks in an approved margin account. You cannot short in an IRA and a cash account without margin. Cannot short. Also, most brokers do not allow you to short below $5, although there are a few that will allow it. But my question is, why would you even want to short a stock below $5? There's not much profit potential. The reward is not as good as what the risk is. So I typically don't short stocks below about $10 or $15. You can, though, for those of you that trade in an IRA or a cash account, if you want to short the market per se, there are bearish ETFs and mutual funds or ultra short funds that basically play the inverse of the market. There are typically associated to there's if you want to trade the indexes, there's ETFs that short the indexes. If you want to trade certain sectors, there are inverse sector-based ETFs that do allow you to do that. All right, so we're going to go through some trade examples. These are all real trades that I made last week. And we'll go through 5 examples, and then we'll look for some trades, but I fear that we've kind of missed the window because the market just kind of hit the low of the day. So Amazon is one of those stocks that I actually have really started to love to trade. And, some people are going to say, well, some of you might say, well, I can't trade Amazon. It's $3,000. But I'll tell you, you can short it. You don't. There's 2 ways, obviously, and this is not going to be a conversation about options, but you could trade options, Or you can do what I do. I don't trade big. I trade 10 to 30 shares at a time. All right. 10 shares is a 30 odd thousand size position. So 20 would be a 60 odd thousand, 30 would be a 90,000 position. It's not going to be a huge position, but trust me, the way Amazon moves, it's kind of scary. You know, I mean, it literally can move 10 bucks in the blink of an eye. You probably don't want to be in much bigger than a position than that. So this was on a week ago, on the 13th. And so what you're looking at is this is the platform we use. If you haven't seen it, it's called MedVed Trader. And then these are my clear lines, or these are very similar to the old Wise Trade algorithm. They're as close as I could get to them. And then you'll see other indicators on the chart. So this is a 3-minute chart. I've got candles overlaid behind my clear lines. I like that because clear lines are momentum and candles give me price. Show me where the price action is at. You'll notice I also have Bollinger Bands. This is Williams %R, which is I use Williams %R and RSI, which give you overbought or oversold areas. And then there's a number of different pivot points that we use: daily pivots, Fibonacci pivots, and DMARC pivots. They're kind of all over the chart. But I shorted 10 shares right up here at $3,300, $33.30. It was kind of funny because Lindsay likes what he calls magic numbers, and I was looking at Amazon. It had kind of hit an initial peak up here, and then dropped, and then hit the peak again, and then just started to roll. And I said, you know what? I'm going to try a magic number, 33, 33, 30. And I pretty much exclusively trade on limit orders with Amazon, and the reason is because usually I can get in pretty close to the ask. Okay, when you're shorting, you want to be as close to that ask as you possibly can. And because the spread will vary from $1 or $2 to $7, $8, you want to be limiting in, not market orders. So I got in on a limit, 33, 33, 30, and then Amazon proceeded to roll over and sell off. It actually hit, you'll see on the chart, if you can see it, R3, which is one of the daily pivots. And so I decided to take profit. That was a pretty big move at that point. Of course, little did I know it was going to continue to roll over. But I went out at 33.1638, and you can see it. By the way, let me back up real quick. That it went down to 32. It actually went down lower. It dropped over 200 points that day. I got out way too soon, but that's okay. I know I'm going to miss it. Here's a 1-minute chart just so you can see a little more closely. It had rolled over on the 1 minute. It had you can't see it, but there was a down arrow. One of the things about my charts is that you'll see arrows when crosses occur, down arrows when it rolls over, up arrows when it rolls up. I also had parabolic stop and reverse in my favor. And then it came down. Here's that resistance 3. It came down and hit that R3 and then bounced up, and that's when I bailed out on that bounce. But as far as a trade, that was $16.92 that I captured on 10 shares in 8 minutes. $169. That's about a 0.5% return on my money. I'm not going to complain. When it comes to Amazon, if I can get a 1/4 to 1/2% return, I'm doing pretty good. So that was a 0.5% return, and that was a pretty quick trade. Next one was Darden on the same day, DRI. So here was the 3-minute. It had been running up all morning long and had hit a peak. And you can see up here, this is the Williams %R. It was overbought. That starts to drop. that begins to go below the overbought territory. I get a clear line arrow coming off the top of the Bollinger Band, and I short DRI at 75.73. Covered that one a little bit later at 75.33. So 40 cents move on RSI. And then let's look at the 1 minute so you can see the charts there. So here on the 1 minute, you can clearly see where I got in. It had hit a peak. It also bumped up against resistance on the 1 minute, R4, and then proceeded to roll over. I do like to draw Fibonacci's on the first 15 minute of the extension. It came right down and hit the 127 of the first 15 and bounced. And that's where I bailed out on that bounce. It actually proceeded to roll back down a little bit further. But I don't look back. I don't care. It doesn't matter. That trade was 15 minutes, in at 75.73, out at 75.33. I shorted 200 shares and generated $80 profit, or 0.5% return on my investment. 0.5% in 15 minutes is not bad. I did another short on Amazon. That was on the 14th. You'll notice that Amazon kept bumping up against some resistance, top, and got right back up to that top, and that was Fibonacci support. It was also, this red line is the first 15-minute high. So, sorry, the low of the first 15 minute, the low of the first. I have an indicator that shows me the first 5-minute and 15-minute highs and lows. We like to use those. I use it for when I'm drawing the Fibonacci's, the first 15-minute range, basically, but I like to see those. Also, you'll see that it just came out of an overbought point, and I shorted at 30.75.50 and was out pretty quick at 30.63.79. So almost 12 points on that trade. And here's the 1 minute chart. Was in right here, and then it rolled over and dumped. And this was, you can see this is RSI. It was overbought, and then that RSI started to drop. It actually had started to peak back up just as I got in and then rolled back down. So that trade in at 30.75.50, out at 30.63.79, 20 shares this time for a $234 profit, about 1/3% return, and that was 3.5 minutes. That was a very quick trade. I did NVDA short on the 14th. NVIDIA's got some pretty big trading ranges. So this one actually I took the screenshot literally as quick as I got in it. So you're looking at the, this is a 1 minute chart. So NVIDIA had been running up, hit a peak up here. You can see where RSI was overbought. You can see there was, it actually had broken the fib pivot, went above it, came back below it, went above it, and then started to roll back down. I kind of looked at this as a nice little mini triple top, or kind of like a Head and Shoulders. I jumped in literally as quick as I jumped in, it dropped like blink of an eye. Literally in seconds, I think I was up $1. And you could see the P&L minus 100 at 412.13. I was already up at that point $119 on 100 shares. So I go in and I place my stop loss in profit to protect about $1.10 roughly, $1.11. So my stop was 411.02. And that's an in profit stop. And when I get a real fast profit like that, I'm going to set that stop quick, because it's very important to protect, because I don't know if it's going to bounce right back up. So I did that, and then it did take me out at 411.10. So that was $1.13, and that trade lasted 2 minutes. So 412.13 to 411.10, 100 shares, $113 profit, or about a 0.25% return on my investment, but 2 minutes. And then this was a good one. Walmart's one that we like to follow. Walmart's been making some really big moves lately. This was on the 15th. We've been watching Walmart quite a bit. That day, Walmart at the open sold off and then filled in the gap. And you can see where it hit an initial top. Well, it went up and hit a double top. And we like the double tops. So I saw initially it started to roll. I shorted initially 100 shares. And then it started to pop up just a little bit. And I'm like, I wasn't real thrilled with my initial entry. So I'm like, all right, I'll short one more 100. I'll add on. So my initial short was 133.77. I added at 133.97. So that gave me an average of 133.87. And then it proceeded to sell off. And it actually came right down and hit fib resistance, which is right here. This is one of the indicators we love, is called VWAP or VWAP, volume weighted average price. It actually came straight down to VWAP. Well, yeah, or it got close to VWAP. It may have gotten through it. I think I have a screen. Yeah, it actually, hold on. I think I have a screenshot of that. Oh, hold on. That was the 3-minute chart. This is the 1 minute. Actually, this is what it did. On the 1 minute, the 1 minute had Fibonacci resistance in R1 and it bounced right off of it. And that's why I bailed out down here. It hit that confluence of two different pivots. And my charts calculate pivots a little bit differently. One chart uses all the pre and post market. My 3 minute, the 1 minute doesn't. So they will vary per chart, which is what I would like to see. It actually gives me a beautiful insight into some of these moves. It did actually, it did come down and hit that volume weighted average price. So had I been a little bit more patient, I could have gotten out another 40 cents out of it had I been a little more patient. What happened was when it hit this, it bounced up and then rolled back down. Again, bird in the hand for me, it's important to grab and protect. And that's what I did. I grabbed and protect. But that trade, 133.77 plus 133.97 out 133.38. So that generated about just shy of $100 or 1/3% return. And that trade lasted 17 minutes. All right. So we do post all of our trades on our website after the fact. Obviously, all of our trades are live in our broadcast. They do get recorded in our chat box. We post them in the chat, and then every trade that I do, Lindsay does, and Jim does. At the end of the day, we record them and then post them. Usually by the next morning, they get posted to our website. So you'll see cumulative totals for each of us individually. You'll see our Lindsay's individual trades for as actives. You'll see his earnings totals. He doesn't do it very often, but he has what's called the anti-Charlene's. It's an overnight trade. And then our team total, which is now over 2,300 points. And then there's a breakdown every month of how we have done each month. March was a huge month, almost 500 points in March. And this was from a week ago. So you can, or last week, it's been updated since then. All right, are there any questions at this point about shorting? Any questions? Because what I'm going to do is I'm going to pause this, and then I'm going to go back in, and then we're going to go to, give me just a second. And we're going to go back in, and go into my charts. Okay, so you should now see my charts. All right, hold on 1 second. And any specific questions right now? So I'll share with you, I did trade Amazon today twice, and I haven't had a losing trade in a long time, and I did take a loss this morning. I got shook out. I got shook out. Um, and that was right here. I shorted at 31.60. No, I'm sorry. Actually, I went long this morning. I did not short. I should have shorted. I actually went long. See, I'm better at shorting. I went long at 31.66.80 and I got stopped at 31.61.70. So I did lose on that trade, a little over $100. Um, but I'm glad I got out because, you know, look what it did. It proceeded to roll over. Now it did run back up later. Did it actually run higher than where I was in? Hold on. It did run up. Yeah, it went up to 31.80, but who wants to be stuck short, stuck long when it's way against you? I mean, I would have been way down. I would have been down 30 points, 40 points. Let's see, where was the low? 31.15. So 50 points. I'm not going to let Amazon go 50 points against me. And I missed the run back up. Now, I did short it a little while ago, 31.70 and then 31.79. So I was average 31.73.57, and I got shook out with a profit of only $2, and it kind of bounced up and then rolled over. I was actually looking for at least $10. I would have gotten the $10. Actually, I would have gotten more because it's lower, but the $10 would have hit had I just been a little more patient. And Amazon is not the easiest stock. I've done very well with it, but you definitely have to have the discipline when trading it because um, it will run very aggressively if you're not careful. Hold on 1 second. 1 second. Okay. All right. No questions. So I was going to try to do a short right now, but I feel like the market's already come way down. We'll look and see if we can find anything. Let me see if there was another good trade I did today. Short. Baba was a good one today. I got a good short on Baba. I can show y'all. That was right here. 20 here. Let me expand that chart. So you can see rolled over on the 1 minute. I had a down arrow. I had VWAP in my favor. I shorted 261.39 and a half. Got out 260.51. So that was 89 cents. It did go a little bit lower, but I typically look, you're not going to get in at the top and out at the bottom. I'm trying to catch a little meat of the middle, and I got a good chunk of the middle of that move. But that was one of my good shorts today. I got a tiny bit on Roku. I got got shook out of RCL. I got a small profit on RCL. That kind of sucked. That was a short right here at 53.67 out. And that was, look at that, just came out of an overbought area, had the down arrow on the 1 minute, shorted. It just kind of hit. This green line is the first, the high of the first 5 minute, kind of bounced across that, and I bailed, and then it rolled over. Although it did bounce back, I just happened to miss a good reentry. Actually, a couple good tops. This has had some really nice moves today. Let me go over to the 3 minute so you can see on the 3 minute. But you can see here was that initial short, came down, bounced off Fibonacci pivot, came back up right up to the D mark halfway point, back down to Fibonacci pivot. Let's do this. Let's go to the first 15 minute. I'm going to draw Fibonacci extensions and see if it rode through those fib levels. Yeah, it kind of followed it. This was right around the 236, and then this was the best trade of the day so far. This short up in here. Down arrow, second down arrow, and still going down. I don't like when I get shook out sometimes, and that's okay. Anyway, let's see if we can. When you are looking for the poppers and droppers, is it possible for you to show ex-dividend date? Well, that's only if you hold overnight, Paul. And what I do is not overnight, so you would not be responsible for the ex-dividend. So I'm not going to look up ex-dividend. It's just I'm already on a pretty tight schedule in the morning, and it won't, for what we're doing intraday, it doesn't matter. That's only if you're holding more than extended period. But remember, usually when there's an ex-dividend, even though you might get stuck paying it, the stock typically drops by the amount of the dividend, right? Because they pay that out of the the stock price. They take it away. Steve, how are you doing, man? Do you consider the overall market direction when you go short? You know, I do look at. I am watching on one of my other monitors. Typically during the day, I'm watching either S&P or NASDAQ futures on another chart. So I prefer to short when we are experiencing market sell-off. I don't consider the overall trend of the market because I don't typically any longer look at the big picture, the long and the mid or the short term when I'm actively trading. I just focus in on the minutes because I'm using a lot of intraday indicators in addition to the clear lines. I'm using, VWAP, pivot points, RSI, Bollinger Bands. So, yes, for me, I'd like to be like I wish like when this session started, I wish we could have done a couple trades right then and there because that was when we saw a rollover, and I'll show you on the S&P or the NASDAQ. Like here's the NASDAQ futures. So we started right here, right in here, and that was the rollover right here, right? Here's the 3 minute. We literally took a dive as soon as I came on. We dumped. So we missed a good opportunity to short. I like to short into, when it's been on a big run and then starts to flatten out or roll over, that's where I want to be short. I I know it's harder to short into this. It's much harder to short into the move up. I'm not saying I don't do it, but I, you know, I do, but I'd rather be shorting into this or into this versus the up cycles. But yes, I am watching for inflections in the market to see when we're making a shift in direction. But I'm a consummate shorter. I don't know what it is. It's something about that feeling when you can see a stock hit its peak, and I look at volume also. Um, there was a strategy that we did a lot further back called reverse the burst, and some of you may remember that strategy. It was based on a rapid rise in price and volume, which was typically followed by a very rapid reversal. And they do happen. I don't see them as often, so I'm not as focused on it. And now that I'm using pivots and first 15-minute extensions and other indicators along with my clear lines, I can see pretty well where these points of inflection are. One of the big things I like to look for is confluence. Confluence is when you get more than one indicator lining up. If you can get two or three or even four different indicators to all line up together, you know, where it hits, like, okay, so here's a great example. Here's beautiful confluence on um, Facebook. All right, let me use my highlighter so you can see this. This is confluence right in here, okay? It is confluence of, first of all, the center line of the Bollinger Band. That's this. My clear lines, down arrow, which is right here. So it gave a down arrow. This is called volume weighted average price. This is one of our favorite indicators because stocks typically bounce off of, reverse off of, or gravitate towards VWAP. So you had that. And you had right here the DMARC center line, the DMC. It's a pivot that they have on the MedVed platform. So you had you had confluence. You had big confluence right there. So whoops. That was a beautiful place to get short. So 243 and a quarter, let's call it, right? It dropped $2 from that point. $2. And I bet if I draw the first 15-minute Fibonacci extension, I bet that could have been also one of those levels. Yeah, look at this. Not only did you have, well, that was up here. All right. This top was the 786 of the first 15. So the initial top and then the failure at that top, the bounce off fib pivot, and then up to this confluence. This was a great spot to be short. And if we go to the 1 minute, you'll see there's that DMC, there's the VWAP, and then you had RSI that never got overbought, but you had the parabolic stop and reverse shift. And that's a good sign too. So that was an additional indicator. That all that together gave a great spot to get short. Yeah, that was beautiful. What time of the day? Uh, uh, what about time of day, like before 11 or after 2? Yeah, Steve, I like my best trades typically occur in the first hour, hour and a half, and then typically the there are some good moves towards the end of the day. It can be tough to trade the middle of the day unless we see, like what we saw, right? I mean, that's the last hour and a half, 2 hours, when the market sometimes will peel backwards. But yeah, I mean, those are the best times. I'd say the first hour and a half and the last hour and a half, typically. Um, I usually only, I trade up until 12:30 Eastern, um, because that's when I'm on the webinar. Although sometimes I'll stop, you know, at 11:30 if I've had a good morning. And then I may or may not trade the afternoon unless I really see something that looks like just fantastic. Like when I saw Amazon a little earlier, I knew I was going to be close to a really good spot after this. It had this really big run back up. I just I should have gotten in on a third trade. Had I caught the third move, I would have captured easily $10. No question. Had I caught the third move. So it would have been one losing trade and two winners. It's hard because I miss a lot. And today was a net profitable day for me. I made money today. Made not a huge amount, made a couple $100. But I now, I doing this, being on broadcasting all morning, and the distractions I get, I trade fairly small. I trade anywhere. Well, I had one trade was big, a couple thousand shares. I got a little deep into OMI this morning. But when I trade Amazon, it's 10 to 30 shares. When I trade Shop, it's 20 or 30 shares. When I trade most other stocks, it's 100 to 300 shares. That's kind of occasionally 500, depends on the price. But I want to. My goal is to show you don't have to have a giant account. You can trade with a 30 or 40,000 or $50,000 account using margin. You need margin, and you can make money. You can make $200-300 a day. That's kind of what I try to do. Just consistency. That's what I'm looking for. How do I choose the picks? Steve, I'm watching stuff constantly. I have, so on my, I'm going to expand this window so you can see a little more. This is my watch list. It gets updated every day. So the top of the list has the futures, and then the next row is the FANG stocks that we watch every single day: Apple, Amazon, Baba, Facebook, Microsoft, Netflix, NVDA, and Tesla. The next row is the poppers and droppers, typically, usually up to 8 stocks. And then the next grouping going down will be other movers for the day. And then down at the bottom, starting with with Adobe. Or is it with Ally? Did I add Ally to my list? No, it's usually Adobe. Starting with Adobe. Adobe, these are other stocks that I will watch or peek at during the day. Adobe, AMAT, AMD, ATVI, Boeing, Baidu, Google, Light, LVS, Momo, mRNA, Moderna, Micron, Penn. This is one that Frank gave me to watch. Procy, Qualcomm, Roku, Shop, Square, Seagate, Skyworks, TNA, Tandem, Twilio, Twitter, WDC, Walmart, Weight Watchers, Win, and US Steel. Oh, and I added ZM recently, and then the Qs, Spies, and Diamonds. Actually, I traded Google a couple days ago. I hadn't traded Google. It wasn't no, let's see, hold on. when did I trade? It was not one of my alerts. I think it was a trade I did yesterday though. When did I trade Google? Oh, thought I traded Google. Did I not trade it? Oh, I did it in demo. I was done. I did it in demo because I might add Goog into my mix of regular trades. So typically I'm scanning throughout the day through that list of stocks. Yeah, Prosy is Lysol. Thanks. That's one of Frank's. Frank's long Prosy. They own Lysol and a bunch of other companies. But I'll scan through and just I'm looking for typically either overbought or oversold, looking for the tops and bottoms. And if I see as I'm scanning through, if I see something interesting, I'll stop and say, all right, this, and then I'll start watching that stock. But I scan through hundreds of stocks a day, just literally looking for an opportunity. Also, in our webinar, um, a lot of the traders are contributing ideas, so I'm reviewing some of their contributions. But and Jim and Lindsay, my partners, we're all constantly looking, the three of us, and if we see something, then we throw it out as a trade. But it's really just a matter of scanning until I see the right opportunity and then jumping on it. Mercedes says the red and green arrows are new to me. How much do you use the green and red arrows to trade? Which of the indicators do you consider must-haves? So I do love my red and green arrows, and if I can get a 1 and 3 minute arrow, it's a solid confirmation for me. So I love the arrows. I love my pivots. If I'm at a pivot and at a Fibonacci level, um, but I don't need any of that. I can just use clear lines with the arrows by themselves. But I prefer if I have something, I like Confluence. I like if I can stack up a couple other indicators, um, I'll do that. It just, but like here's a great example. Double top on Momo, right? Right on volume weighted average price. So when it came through VWAP, there was a down arrow, two down arrows on the 1 minute and a down on the 3 minute. So that would have been a good spot to get short, right? VWAP, when it went through VWAP, right here, went through VWAP, you had the down arrow, you also had parabolic stop and reverse. So yeah, 1946, right around 1946. Not a huge trade, but yeah, 15 or 20 cents on a $19 stock's not a bad return. And you had an arrow right here on the 3 minute. So when those arrows start popping up, and let me explain to you something about the arrows. So like right now, Momo just got a green arrow on the 1 minute. That could undo itself and go away until that interval completes. Once this 1 minute is done, then as long as it doesn't cross back, it's locked into place. So these prior arrows don't ever change. It's only in the current time frame. They can disappear because you can see this is live. This is real time. So as that 1 minute is moving up and down, if it rolls back over, that green arrow could, oh, okay, so we just added another interval, so that's locked. That will not go away. That will not go away. Let's see if we can find another one that's building a new up or down arrow right now so you can see. Like that one just locked on Google. That just gave an up arrow. And look how it, now it's starting to move pretty good after that one arrow. That would be the long trade. Light just gave an up arrow. You'll get some false. The lower the minute time frame, the more you can get false. They can change pretty quick. But there was down arrow, down arrow, down arrow, down arrow. You did have a couple of brief ups, up, down, up. You'll see fewer arrows on a bigger time frame. Like this was a good up section because you had up arrow, up arrow, up arrow, up arrow, up arrow. It kept giving you up arrows. Alex says, how do you know when to exit the trade without a specific time interval? So for me, I strictly, well, I exit based on two criteria. One is trailing the stop manually, and then the other is using a limit. If I, like on Amazon, sometimes I'll set a limit. If I have an idea where I think it's going to go, I'll put a limit order, basically where I think I'm going to get profit, and then because Amazon you have to use limits, you don't want to get stopped on. So I'll set a limit on a target based on where I think the price might go. Like earlier, I had a feeling it was going to, when I was short up here, I had a feeling it was going to get to VWAP, and it actually did. So had I gone back in on on one more trade, that would have been my target VWAP, and I would have had a limit down there. I actually had a limit at VWAP, and then I canceled it because I got shook out, and I limited out with $2 and change. So markets have closed. I do want to thank you guys for joining me today. This was recorded. I will post this to our YouTube page, and I will be back on Thursday. This session is every Tuesday and Thursday at 3 o'clock Eastern. I'm out next week, so don't log in. I'm taking time off next week. I'll be back the following week, but if you want to join in, use this same link every Tuesday, Thursday, 3 o'clock Eastern. If you do have questions outside of this, you're welcome to email me, kip@equity-alerts.com. You can text me or call me, 972-841-8886. And again, thank you very, very much for being here today. If you're interested in learning about our alerts, you can go to our website, which is equity-alerts.com. We do offer a free trial of our alerts. If you have not taken that trial yet, no credit card required. It's a 1-week trial of our alert service, and you just click there to try it now. Just name and email, and then you can give us a shot. Oh, that's right. Correction. Thanks, Frank. RBGLY is Lysol. Probably something else. Anyway, thank you guys, and I appreciate y'all tuning in today. Have a great afternoon, and I'll see hopefully some of you guys on Thursday, and I'll see some of y'all in the morning. Good night, everyone.